Well, hey, hey,
Good evening.
good evening.
I like that picture of you.
Here, thank you.
Mhm.
That was from my date a couple weeks ago. I went on a date with my boyfriend. Yep.
I like that top. My favorite color is blue.
Is it?
Hmm.
Yeah, it was a dress. I usually don't wear a lot of dresses. And it had this little sewn pattern. It's almost like embroidery kind of, and it had
Uh-huh.
embroidery along the tail of the dress as well.
Pretty, very pretty.
Thank you, thank you. How's work going?
It's going well. It's a very fast-paced,
Okay.
demanding job, but the
Uh-huh.
people are really nice.
Uh-huh.
Yeah, so it's going good.
Well, that's good that I know you're having to leave home and go do it.
Yes, that's that's the challenge.
That's the challenge. I gotta go somewhere to go do it.
Yeah,
Yeah, I get it.
but it's
How's
better than
everybody? Go
trying
ahead.
to find a job, so I'm grateful.
Yeah, yeah, yeah. It's one of those things where when we don't have, we want, and when we do have, we're like, well, maybe not. Yeah, maybe not. How's everybody else doing in here? Danielle and Christina, Marcia, and Wink, how y'all doing? Will is here, TJ and Tanya. Good evening, y'all.
Hey, Coach.
Hey, you doing okay?
Yes, ma'am. How about yourself?
Good. I was talking to my husband. We were riding. We were talking about the Dallas Fort Worth area.
Yeah.
We have to put y'all on our list.
Come on. Yes,
We
ma'am.
have to put Dallas Fort Worth on the list.
Mhm.
We're always talking about how there's stuff I want to go see outside of the country, but there are lots of places to go right here in the country that I
Mhm.
haven't been to. Uh-huh.
Hey, Coach, this is Marcia.
Hi, how are you?
I'm doing good.
Yeah, you have a good
Closing
weekend?
down, yeah, closing down the garden. It's getting ready to storm.
Is it?
So,
Okay.
yeah, I'm
What things
outside.
what do you grow in the garden?
Tomatoes, peppers, got some bell peppers and jalapeno peppers, all kinds of tomatoes.
What do you do with your things that you grow?
Eat it or give it to the neighbors.
Okay, and give it to the neighbors. That'll work.
Yeah.
Uh-huh.
Yep, yep, yep.
I was with my dad's family, and I have
Oh, yeah.
my aunt turned seven, my aunt turned 80 this weekend. And they in their community in Fayetteville, they have a community garden. And my uncle is one of the they have like this big area where everybody has their raised boxes right there. And I was like, it's such I remember when my aunt had a different aunt had a community little area that was hers, and she would go to the garden every day and work in her garden. She had her little friends out there that she would hang around with, and they would all grow different things, and then they'd share and share alike, and they'd sit around and talk while they were watering and weeding, and it was a whole little community, a community thing.
Well, that's how I started with the community garden. And I'm like, you know what? I want to do this in my backyard.
Yeah, yeah. Yeah,
So
my
here I
aunt had
am.
one in her backyard too. She had a community one and a backyard one. Yeah, same thing. Cool, cool. I'm trying to get Trading View open. Wonder if I can quickly send a message to the folks in the membership. I didn't do that earlier today. I can't really send a email to my list very easily from my phone. I really need my computer, but it would be great if I could send it from my phone. Would save me some effort, but it doesn't work as well. Did you all do some charting and stuff? Some of the things that I gave you as homework to do. Hopefully you all looked at some of that stuff. Did you all look too at like your profits from the week? Did you like revisit your trades for the week? Did you identify areas where things went well, where things didn't go well, that kind of thing? Let's talk a little bit about that. If anybody wants to share about your week, whether that's sharing profits, sharing lessons learned, sharing, things that you learned, things that went well, things that didn't go well. Let's talk about it a little bit. Anybody can start. No, nobody has anything to say. That seems a little hard to believe, especially because we had a couple days with some losses. Nothing. I'm the only one that looks back at it and then beats myself up for not doing things right.
Well, I will say that, my loss this week, it was definitely over trading and,
Mm-hmm.
getting greedy, and
Mm-hmm.
even though I sit there and, the things that we write out and stay, about our plan, it
Yeah.
still creeps up on you, especially
Yeah.
when you've had a couple of wins.
Yeah.
You get that feeling like, oh, I could do this, I could do this.
Yeah.
So
Yeah. Yeah.
so going forward, I'm thinking I'm just gonna really stick to the days when I can really pay attention to the chart.
Mm-hmm.
Like those days I'm in the office, no.
Mm-hmm. Yeah.
So I'm just gonna change some things up this week because I said,
Mm-hmm.
it's more about being more consistent for me and actually keeping the profits
Yeah.
by the end of the month,
Yeah. Yeah.
which that's my goal. So
Yeah. That's a
yeah.
very good one. Mm-hmm. Mm-hmm. Very good. Those are things I've visited as well. Just thinking about, I think it might have been, had to be Thursday. Yeah, it had to be Thursday that we had such a drop and then the price recovered, and or the other way around. I think Janae, it might have been Thursday where Janae asked that I think it was going to come back down there. I think it had to be that we had gotten money down here and then the price went up and didn't lock in the PDT hack, and the price went right on back down there and actually ended up breaching that same strikes. That was Thursday, thinking it wasn't going to come back here. Then I didn't lock in the PDT hack when it went up into the 6,000. Oh yeah, that was Thursday. And I could have locked those PDT hacks in up here and not had to worry about that money coming back when it went right back through those strikes. I wouldn't have had to worry about that. But here I was just kind of sitting, riding it along, knowing good and well that part of my trading plan does include that when I'm getting into these 10:30 trades in the morning, if I'm in Thinkorswim, that I will lock these trades this early in the morning. I don't lock the Robinhood one because that Robinhood doesn't give you that opportunity, but I also plan to wait a little longer in Robinhood. This is, basically comes down to revisiting your trading plan that says, when I'm here, if I'm entering trades in this area, which is what I did, that when this price went up here, then these trades here should have been locked with a PDT hack versus just waiting around. Because I was thinking, Janae said, you think this is going to come back down? I was like, I don't know. We're kind of in a a buy the dip arena. And then next thing we know, this price fell and fell and fell. And then the whole bromance broke down between Trump and Elon Musk. And then we had more falling, falling, falling. And my good old trade ended up being a breach by the time it was all over with. And I really could have locked in my profits up here and not even had to worry about it. But FOMO and greed, more greed in this case than FOMO, comes for us all, and had to be revisited, back to the trading plan and say, what is the trading plan? And we're locking in profits along the way. And it don't have to be massive profits. I mean, in this case, I took in $135 per contract here. And when I got up here, I literally could have locked in $100 a piece. That's plenty of money, Arlissa. Okay, I'm talking to myself. That's plenty of money. $100 per contract is plenty of money. I could have locked in $100 per contract. I had 3 or 4 contracts. I would have locked in $400 in profits, but nope. What ended up being, by the time I got down here, ended up being a loss of $2,000. Minus the money I took in here. But by the time it's over, what could have been a $400 profit, $400 profit, ended up being negative $1,500. Which it doesn't even make sense. There's really no real answer. There's no reason why a green trade needed to go red. There was no reason. So I had to revisit that for all the reasons. All the psychologicals, because trading is very heavily psychological. What makes you not do the thing? What causes you to freeze? What causes you to not make the next move? All the things, right? We have to deal with all of those, which is why you all got a whole bunch of different, you know, rules that come after this. These are rules that come out of the out of my conversations. After that, we get rules that come out of conversations. And you all just get the leftovers from my own rules, but that's how that goes. Anybody else want to share something?
Well, on Tuesday, I was able to do a call credit spread. Got in about 10:30 and got
Uh-huh.
out about 12:40 for
Yeah, this is
$180 profit.
uh-huh.
And I had to use my one of my trades,
Uh-huh.
so I stopped. And so
Yeah.
I didn't want to
It's good.
overtrade either. So
It's good.
I'm learning. I
Yeah.
am learning.
Yeah. Take your
And
money and
also,
keep
what
going.
helped me was you talking about your coach. I was all because I have a mentor too,
Uh-huh.
um, for ministry, right? And I
Uh-huh.
had a meeting this week, so I was encouraged. So when you said about don't trade and travel as you're on the road, because we're traveling on Friday,
Uh-huh.
and I said, you know what, that's right. Because even in class in school, sometimes, I'm telling the kids, oh, wait a minute, what's going on 9:30? The market's open. Everybody stop for a minute.
Yeah.
Then so I'm not going to trade on Friday at all.
Uh-huh.
And so, but I am learning. I'm gonna tell you right now, I am learning. So I had a pretty good week, so to speak.
Uh-huh.
So I appreciate
Yeah.
y'all listening.
Yeah, definitely. Definitely we have to set the guidelines for ourselves. Um, on what's the time. And I found on Friday I started talking about a little bit on the YouTube, and that's not the environment for me to talk more specifically about that. But I was fine as the day as I was doing it earlier in the day, but as the day we were still riding, and as the day wore on, by the time I got to like 2, 3 o'clock, we were getting closer to our destination. And I think we got to the hotel like at 3:30, 3:15, 3:30. The trading day's winding up. It is now power hour. I've been, trading and riding and trading and communicating. I've been doing all the things. By the time I got to 3:15, 3:30, this is what happened. And I realized that by then is now I have, though I was managing all the pieces and the parts along the way. I got to the place by 3:15 and 3:30 where I had tapped out, because I've now got too many things, too many irons firing at one time. So now I need to literally focus on the 3:15 to 3:45, because that is, trading requires me to focus. But now I have to focus on the fact that we need to check into the hotel. And my husband's not going to sit here in the car for 45 minutes while I keep looking at my phone. He's like, okay, so what's next? So and checking in requires us all to move our things from one place to the next. And every minute, all these minutes these are all minutes. So I'm just like, oh, but I still I need to do this. And it's kind of like, okay, what are you doing? Then finally I just stop, like, okay, what are you doing? What are you doing? So talk to TJ on the phone after that, while my husband went into Walmart, and TJ was like, AP, what are you doing? I was like, I was trading with, he's like, what are you doing? He was like, you need to trade in a house, in an Airbnb, in a hotel room. Why are you trading in a car? What are you doing? He was like, you are moving 5 figures a day. Why are you in a car trading? What are you doing? You're not at that level anymore. And I was like, well, it's just, he's like, no, you're running a community. You can trade with your community, have your community. Well, if you're doing that, if that's what you need to be able to do, that's fine, because you still want to be able to manage that. But doesn't mean you need to be trading. I was like, yeah, but I took a loss on Thursday. He was like, so Monday's coming. You know, and this is the kind of mentor that we need, somebody who can talk directly to you and have you listen and say, okay, that's real. That's real, but now what? You know, what was did you need to? Or if you were going to trade with Jay, if you were going to trade yourself, then perhaps you should have just said to the community, I'm traveling and I'm not going to call trades today. Because you could do one or the other. You don't have to do both. And yeah, you're right. You're right. You're right though. You know, I'm with you when you're right. So um that's how that's just, these are all growth and learning things for me, because as we go to the next level, I think I maybe put a graphic. Did I put a graphic in our thing, girl? I put lots of in our chat today. But as we go to different levels, you know, of growth, and I talked about as we scale up and as we level up, we have to different mindsets are required for different levels. When we're trading at when we're the $500, $1,000, 2,000 and $2,500, that kind of level, that takes a one mentality. But when we have people who are in this community who are trading and are trading at the $1,000 a day, and who are going to pull in $5,000 and $10,000 a month in profits. When you're pulling in those kind of profits, that's a different level and a different mentality, because now you're moving into like a professional level of trading. Of course, you're going to go then to the 10 to the 100K level, but that's a different mentality when you're doing that. Those aren't the have to trade every days or have to trade all day. Though that's where the mentality shifts, and then the mindset has to change. And that's where I'm having to manage that myself, to say, to shift from that, from being the person who was the one contract wonder, because I've been a one contract woman for a long time, and to shift to say, okay, I've already shifted to doing multiple contracts, but now the mentality of the reason, and TJ said this, the reason you do multiple contracts is so that when there are days when you don't or can't trade, you don't have to. This is why you do multiple contracts, so that way you don't have to trade every day. And these are good points. These are good points. I made a point today, which we can talk about that next, when you're scaling up, you can go from what did I say, from a 5 spread to let me see if I can get this logged in right. You can go from a 5 spread to a 10 spread. Did y'all understand what I was talking about when I was saying that?
Yeah, you
Yes.
gotta show me. You gotta show me because I'm a visual. I heard you, coach. I just gotta
I know.
see it.
Yeah. I get you. I
Okay.
get you. Yeah. So on the option chain, we have the 5 spread is what populates on its own. My Thinkorswim is opening up right now. So you have the 5 spread automatically, but when you're making it wider, if you want to, instead of, you could do one contract that's a 5 spread, or you can do, 2 contracts, gives you, double, quote unquote, double the money. But you also could do a 10 spread. You could also change that to a 10 spread, which is widening it and taking in more profits. And I'm trying to get some fan going. I'm hot. You'll take in more profits and you won't put on more contracts. You'll take in more money at one time, which will be a little bit less on fees, because we pay fees based on the number of contracts, right? So that's going to be less contracts, and and it potentially could help you with your feels, because if you're, doing 2 contracts, 4 contracts, 6, sometimes depending on what price you're at, and if you want it to feel fast, sometimes we'll see where 2 of our contracts will feel and then some of them won't. Like some of them feel and some of them didn't. We get like a partial feel. Of course, if you have less, then won't have to worry about as much. And you're also going to get a little more room at the line. When I say room at the line, you'll get more room at your short leg when you do it that way too. And I know I'm probably saying a lot of stuff and y'all like, what is she saying? But let me show it here. We're going to go and look at the charts here in a minute, because we're going to assess SPX here in a second as well.
And can you show us, coach, how to? I know you said 500 will be in our box. Instead of 500, it'll be
Yeah.
1,000. Like, can you take us through that? Okay, thank
I
you, coach.
will. Yep, I got you. SPX. Okay, so as you see, these are all 5 spreads right here, right? So let's say you decided you wanted to do, you like the 59.80. I'll use this as a put credit spread. The example I did in our example earlier today was a call credit spread. And I'll do another of a call credit spread too, but I'll do a put credit spread for this first one. But let's say we liked 59.80 as our short leg, right? So when we select 59.80 as a 5 spread, when you select this, it's going to automatically give you at a 5, 59.75, 59.80. It opens up as a 5 spread, right? Come on, there we go. So 59.75, 59.80, 5 is the difference. The one you're going to want to change if you're making it a 10 spread, you want to change the plus. You want to make it wider, right? Because there's 5 between these two. Now, you want to keep the short leg because that's the one that matters the most. You want to keep that one, but you want to change this other one to one more away so that now there's 10 between these two, and it still needs to say red, because if you go the other way, it's going to go, it's not going to be the same trade, but it's not even going to look the same. But you want 70.80. Remember, 59.80 was our short leg. 59.70 is our plus one. So now we've got 70.80 is our spread. Now this is a 10 spread. That means we are now utilizing $1,000 of collateral. We're taking in $245 in profit. And that means we're using, if we got $1,000 or a 10 spread, that means we're using what, $755 of collateral? Don't that add up to 1,000? Okay, so this is our premium and this is our collateral. Y'all agree?
Yes.
Yes.
Okay.
Yes.
So our collateral is also our max loss. When we're doing our PDT hack, the collateral is our max loss. 245 premium, 745 is our collateral and our max loss. If we're going to PDT hack this, okay, so now we've got a 10 spread. This is our PDT hack. If we're going to add to this, when you took in 245, you were thinking about, well, how much money would I want to keep off of this, right? Would I want to keep $100? Because let's say, TJ, for you keep $50 off of your 5 spread. Let's say you want to keep $100 off of a 10 spread. This is just me, picking a number. Then you would add that to the 755 and you would say, okay, now I want to put 855 in the box when I do my PDT hack. It means you would use these exact same strikes as a CCS for your PDT hack, and you would put in 855 in that box. Okay, I'm pausing to see if there's a question.
I thought we couldn't go over 500. I've never seen anything over 500.
That's because now you've got $1,000. Remember, we went to a 10 spread. So you can't go over 500 when it's a 5 spread. But now that we're at a 10 spread, this whole thing adds up to $1,000. Okay, 5 spread is 500. When it was 75.80, that's a 5 spread. When we go 70.80, that's a 10 spread. That's where that 1,000 comes from. This whole thing together, these two together add up to $1,000. That's how you can go up higher now, because you got more collateral. You got $755 of collateral, and you got more money tied up for collateral. This is like when I said when you're ready to scale up. This is something that happens after you've surpassed maybe you're past your $5,000 mark. you're a bigger amount of money and you're ready, you're going past your 5 or 6 or 7 contracts. You're putting on bigger contracts. This is not for the 1s or 2s or 3 contracts. This is when you're ready to put on 5 contracts, 6 contracts. When you're putting on bigger contracts, instead of doing more contracts, you widen the spread. Okay.
Okay. Mm-hmm.
Okay. We have some people in the community that are in this position, not everybody, but if you're ready to, when you're ready to scale up contract wise, you may, instead of adding more contracts on, you may just go to a 10 spread instead.
Okay. And
Okay.
coach, in the chat, someone asked which one gives more premium?
Okay. Which one? Everyone. So a 10 spread is going to give you more premium, but it's also going to require more collateral. So you're going to get more because you put up more, if that makes sense, right? You're going to get more in premiums because you're putting up more money. So when I go back and I see this is a 10 spread and it pays 245, but when I go back and put it at 75, it paid 130. Okay, this is the comparison place. When it was a 5 spread, it paid 130, which meant the difference of this was what, 370. This is the 5 spread here. But then when we made it a 10 spread, it was 245. We put up 755 in collateral. These are the differences, right? This is less collateral paid. You received less, 130, you received 130, and you put up 370. Over here, you received 240 and you put up 755. So you're going to make more money here because you're putting up more money. Make sense?
But if you do 2 contracts with the 130 premium and the 370, you get more.
You're going to get more
650.
money. Right. You'll get more money here. So if you did 2 of these, you're right. You're going to now have $260, right? And you're going to then put up what, $740. What the difference here would be, you're going to pay a little bit more in fees because now you have more contracts that you're working on. All right. The line for your breach line is going to matter. This is kind of get to the fine details where the place where your trade you have for your strike, you've got like the 59.80 subtracting the 130. You got a little bit of room at the line. When you go with the higher, you get more money and you get a little more line, a little more room for it to breach into that line before you get to a break even when you do a wider strike. The more money you take in, the more room you have at the strike for it to break even. So yes, a onesie, you do make more money by doing it this way. Yes, it will cost you a little more fees because now you're going to pay, contracts times, times 2 or times 4, whichever it is, right? Because you're going to pay to enter 2 and exit 2. If you're doing a PDT hack, you're going to enter and exit 4 of these because you're entering on the 2 sides and then you in the PDT hack for 2 more. So you're going to have 4 contract legs. So you're going to pay more in fees. But we don't pay a lot in fees anyway. We pay what, 50 cents, 65 cents a piece. So it's not a lot. Yep. For a lot of people, it would just be easier to continue to do it with the 5 spread. Okay. This becomes a thing when you're getting up to where you're doing like 10 contracts. Instead of doing 10 contracts, you would just do 5 of these. Okay. This is where it really becomes, if you start to do a lot of contracts, it would just be better to widen the spread. Okay. We don't have a whole lot of people who are caught between making this decision. But I was saying for those who are scaling up, this is something you should think about.
Coach, is it going to
Alrighty.
be double the time for your PDT hack to field? Because it's got to reach that 800 number?
No, it shouldn't be because that's still price action.
Oh, okay.
it won't take longer. You need the price to, if the price was at, you know, 245, it just needs to move enough to get to the other place. It won't be any more time.
Okay.
No, that's a good question, but no, it won't cost any more time. If you widen the spread, will you still exit if your short leg is touched? Yeah, you should. Yeah, maybe you might give yourself a little more room, but yeah, that short leg still matters. But if your short leg is getting pushed through, it probably would still be good to go ahead and exit when it's touched. That's a good question, Mr. Wesley. Alrighty, let's go look at our chart. I don't know how this got to 4 and how I can get it off of 4 now. I know how it got to 4, but now I don't know how to get it off of 4. Oh, you know what? That's flexible grid. Take me to charts. Just give me a chart. Give me the beat. Pow, there we go. Somehow I end up with flexible grid. Okay, what was our list of things that we went over? I hope y'all looked at it. The Zoom link, it's in the Telegram. We'll see this until YouTube
Well,
live.
the question, the only thing about the 10 spread is you
Yep.
could like Friday, where did we end? Friday was if you did a 10 spread and it was so close to the 6,000 and we was worried about it getting above, it was what, 610, then you would have been breached because the gap is now widened for it to fall in between there.
Okay, so let me do the example as to how I say you get more room at the line, because that's the extra explanation. Okay, so let's say I'm gonna give this example. If you had, let's say your line was 6,000. Let's say you had entered a trade and you had, we're gonna do two examples. Let's say you had let's say you had 6,000, 6,005, and you had a CCS and you had collected $80 on your 50-cent spread, on your 5 spread. Let's say you had this trade, right? Your break even place on this trade, your break even place is 6,000.80 cent. This is the place when, if you had this trade, 6,000, 6,005, and you collected $80 in premiums, then your break even, or the place where you start losing money, is $6,000.80. This is where you would start to lose money. You would have started to lose money. Turns out that price was below that a little bit, right? This is where the place is where at this point I'm losing money. It turns out you didn't. If you had, example, 6,000 and 6,010 CCS, and you would have collected, I'm just gonna say maybe you collected 145, because you don't ever get like a 2 for, you don't ever get a double. You don't get a double up. Let's say you collected $1.45 in premiums. You had a 10 spread and you collected $145 in premium. Then your break even here, anybody want to guess what your break even, or know what the break even is here?
$6,001.45.
$6,001.45. So you get that much more room at the line. So when I say at the line, 6,000 is the sale leg. That's the place that we don't want to be breached. If you collected $80, you get that extra 80 cent at the line. That's your extra room at the line based on what you took in. if you took in $1.45, you get that extra $1.45 at the line before you're at break even. This is where the benefit of a wider spread can help you. It gives you more room at the line. So if, for example, Friday price would have closed at 6,001, you still got room because you aren't breached until $6,001.45. You aren't really breached at 6,000. All we ever talk about really is the 6,000 because it's easier for me to convey it that way. But you do have room at the line based on what you took in premiums. Right? So when you widen your spread, you take in more money. And when you take in more money, that gives you more room at the line. Take in more money, take in less, but gives you more room at the line. So to your point, Janae, it's not necessarily true. You have a wider spread here, but you have more room at the line. Now the problem comes in if at close the price runs all the way through both of these, then yes, that's a $1,000 loss. But you've got more room in the case of like Friday, where it's just dancing and it's right there at the edge, where it's right there hovering at the brink, which it did on Friday. You've got room there for it to just dance at your place.
Don't
And
you
if you
don't you
go
actually
ahead.
even have more room for max loss because your spread is wider?
Yes, you do. So
Okay.
you have max loss would have to occur all the way at 6,010. And and here 6,005 is where max loss happens. Let's say we were looking at put credits. A lot of times I think we were looking at put credit spreads on Friday. We had 59.95 and 6,000. So let's look at it from the other side, right? So let's say we've got put credit spreads instead of call credit spreads, because some of us had even though the price was falling. Let's say we had 59.95, 6,000 put credit spreads, and you took in, I'm going to take $75. Let's use some different numbers. From a put credit spread standpoint, now we need to take away this $75. So our break even on a put credit spread, you have all the way down to not all the way, it ain't like it's a whole lot. 59.99.25. And that's because I took away the 75 cents. So you have a little bit of room at the line, take away this 75 cents. Your break even place is actually 59.99.25. If you had 59.90, 6,000 put credit spread. Okay, so say you had a 10 wide put credit spread and you had taken in $1.30. Then your break even place or your room at the line, you actually have all the way down, not like it's a whole lot. You got 59.98.7. Is that taking away $1.30? Yeah. You've got room at the line down to 59.98.70. So this gives you a little bit of benefit for widening the spread. It gives you more room at the line. And as I believe that's Yvette talking, is saying you also have your max loss doesn't occur until you're at 59.90. Here, max loss occurs at 59.95 because if it goes through both of these, max loss, wider spread, max loss doesn't occur till 59.90. Those are just two differences. There are people who are avid, widen the spreaders for both these reasons, to give yourself more room at the line and your max loss is bigger. But again, you're putting on more collateral because here the collateral here is $870 that is being used for collateral, and here it's 425. So you're putting more collateral on these trades. When you widen the spread, you got to put up more collateral.
What do people tend to do more of? Do they tend to just add on more contracts or widen the spread? What seems to be like what people do most of?
People generally do more contracts because of the fact that you see, I mean, if I can do, you know, one contract for 75, then two contracts is 150. From a money standpoint, it's more money. You know, three contracts, 225. It's more money. Four contracts, $300. So generally people do more contracts because it just, from a dollars and cents standpoint, it's more money. But as you get, I feel like as you get more involved and more in depth with it, you really start to look at this. And this is where I'm starting to look more at the 10 spreads because I want more line, I want more room at the line now. I want to be able to do more contracts and take in more premiums, but I also want to have more room. I want to make sure that if the price dances a little bit at my strike like it did on Friday, because I had 59.95, 6,000. Yeah, I want to have that extra space there too. And if I'm gonna put my collateral out, I'd rather have a little bit more room. So I'm starting to look more at the 10 spreads because I'm putting the collateral out there anyway. You're putting the collateral out. I mean, at this point, you've got $1,000 here. You know, you've got $2,000 here. If you're putting up 4 contracts, you're putting up $1,000, I mean $2,000. So since I'm already putting the money up, I want the benefit of the money, which is to have I want to have the room at the line. I want to pull in good premiums. And I want the money at the line. I don't just want the premium. So I'm thinking, I'm leaning more towards this now for that reason. And SPX can run through a 5 spread in a matter of seconds. We've seen it happen where it's fine at 359 and at 4 o'clock, your trade is busted. So yeah, these are just thoughts to ponder. Janae, did that make it clear? I know that was a long explanation. Did that clarify some things?
I hear you. I was looking at all the closes of last, since I've been recording the and there's some possibility there. There's some sense there where, like last week for sure, you know, 2 days we was at 59.70. One was 59.70.37, one was at 59.70.81. So you would have definitely been covered. Friday was the 36 cents of the 6,000.
Yeah.
There's some points where, I mean, it could. I hear you with the more room at the line. It's interesting that we've had some where we've ended as opposed to really being in the middle. But it's really about where it closes. So if I'll keep tracking of it.
Yeah. Some of these things are just, for us to continue to think about. So as we continue to build and grow, which we will continue doing, is building and growing. As we continue to build and grow. Okay. Where's my stuff? Okay, here we are. Is
I
there a
guess you
question?
did say, real quick, last week was interesting. We didn't do got a brain freeze. We didn't fill the gap twice last week, or it felt like. I know we definitely didn't fill the gap. Friday was such an anomaly. It was crazier than crazy. We expected all the stuff to happen, and it was one of the
Yeah, it
upriding
was a
day.
consolidation day.
Well, it wasn't so much consolidation. It was just that
It stayed in the zone all day.
but we anticipated stuff to happen. It was a Friday.
Yes.
You would think there was less volume. People
Yes.
was in it, and it, for all of the other different reasons. But the gap didn't fill.
Right.
And it didn't fill 2 other times during the week. And so it was just like, well, you're not doing what you're supposed to do, SPX.
Mm-hmm.
Play your part.
Right. So this is what we had Friday was literally the opening range was massive. That first candle was monstrous, which is our first 15-minute candle. If we did the 30-minute range, which I put a little thing in the chat today about the 30-minute range. If we looked at the 30-minute range, I'm going to turn it red so we can see it real good. If we looked at the 30-minute range on Friday, price never left the 30-minute range all day. It just danced up and down. It went around it. It left it real quick and came right back into it. This is what it did all day. It up and down inside that range, basically in and out. It ranged all day. This was Friday. It hit the top, came down, it went and hit the bottom, rejected, and this was Friday. Now, this is one thing that we can see just for future reference as we're trading this in the future. This is where our charting comes in. This is where our charting comes in handy, right? These are the places where our charting is so useful for us. We talk about our wicking. We've been using our 15 minutes. So I'm going to bring this line down to the 15-minute because we've been talking 15-minute. I do like the 30-minute outer range idea as well, but 15-minute, this was our first 15-minute candle. We really didn't get out of the range. We had this wick, and when it came back to try to touch it again, it did not go out of it. This lets us know here that it couldn't come out of here, that we could call credit spread above here. When it came back up here and didn't go out, this was the opportunity for call credit spreads. And if we capped back up here and it didn't go out, we could have called credit spread up here. Just go outside of the range. 60-20, even though I had closed mine off thinking it was going to go back because the Friday had the big old line up there, and I thought it was going to try to go and get my my trade at 60-15, so I turned it off for no reason because it ended up closing nowhere near it. But call credit spreads because it kept rejecting up here at this line. Lets us know that this big wick is a rejection point. This rejection, these wicks are all rejections. So we could trade above this area. We could pick strikes up here, and we could see at 60, 30, and 40, the money wasn't up there because you couldn't go too far away because there wasn't any premiums up there. And then when we were down here, when price came down and we got this wicking down at the bottom. And I think Phil might have mentioned it down here. We got this wicking here. This was a good entry here that I missed. But once it did this wicking and rejected off of that moving average and the bottom, that was a great entry for put credit spread. Because once this rejected here, you could trade a put credit spread below this rejection, 59.70, 59.60. You could have got something down here, 70 or 65, or even if you wanted to go down to 59.50 and basically go with that, whether you wanted to PDT hack it or just let it go into expiration. You see, we ended up closing at 6,000, but put credit spread, call credit spreads, let the day do its thing. I see your hand, TJ. Let the trade do its thing. This is a day you can kind of see, we could see kind of early, or kind of early. This big wick kind of was an indication that there was that the buyers were stepping in down here. And then this was another confirmation that they were stepping in. But the gamma chart looked so weird because it was wide on Friday. There was a lot of green and a lot of red. It was not clear on where we were going on Friday. It was not
That
clear.
part. And
Yeah.
there's a gap. We was there.
Yeah.
That's why I didn't play that PCS. We were
Yeah,
still in
the
the middle
gap.
of a gap.
Yeah, the gap was not clear. Whether it was going to try to go fill it. I
Right.
agree. Yeah.
even for a quick down and then come back up.
Yeah.
And it's a Friday. That's all.
And it was a Friday, which we know how that goes. This gap would have been from here, from this close up to now what we have is wicks, but Friday, there we go, all that gap from 59. So what you could have done, another thing, so if you were keeping the gap in mind, which you may have been, then when it came down here and rejected, you could have gotten put credit spreads underneath the gap. So you could have gotten 59.30. It might not have been much money, but you could have gotten 59.30, so that way you could be underneath the gap. Underneath or 50%, past the 50% mark, something like that. TJ, go ahead with your question.
Yes, coach. So I have two quick ones. The first one is a gap is always filled or just touched?
Most times a gap is going to be filled, but it's not always filled necessarily the first time. So just because it gets touched doesn't mean it's going to be filled right then. It might be touched and filled a little bit. Like really this gap really was from Friday. Let's see, this gap, if we were to look at what was it Friday, it actually, this was the gap. So, okay, come on. Come on. A little bit of it, now you can't see it because it doesn't want to show. There we go. So the gap was from the bottom of this red to the bottom of this green. The gap a little bit, the candle came in here and some candles came in here. So it filled a little bit of the gap, about 25%, but then it bounced back off of it. So the gaps are touched. Sometimes they feel, but it really comes down to price action to see. What showed us that this one may or may not feel was this one, the way the wicks rejected right here. Let us know that it was going back the other way.
Okay, so this is still a gap to us. It's not complete because it touched it. Is that, I guess my understanding
Right.
is
It's not complete because only part of it is filled. So the part, you got some wicking that happened here, but now we still got this part left.
okay.
Now what's left is that part there. The part where the wick didn't, the part where there's no wicking or no candle, no price action, all of this is still the gap.
So we need price to at least go to 59.40.16, right?
Yes, to go all the
Oh,
way back down here in order for the gap to be filled. Right now it's not filled.
okay. Thank you, coach. And my
Mhm.
second question is, I
Yeah.
got in on that second candle there on that breakout, right? For a PCS.
Uh-huh.
Don't you know my PCS did not fill to that last green candle, which
Really?
I'm confused because I
Hmm.
thought when I do a PCS, price needs to go up, right?
It does. Yeah.
And it got filled. My PDT had got filled, but it's right there, that last green candle of the day. That no, no, nope, nope. Go one more to the right. No, the last green one.
Oh,
That
this
is where it got filled.
feel when it popped up here.
Mm-hmm. Ain't that weird? I
Okay.
was like,
Yeah, that is.
what
Yeah.
was that about?
Yep. It depends on how much you were looking for. If you do, and if price needed to move a lot. Now, remind you, at this part of the day, you're working again. You got two things working at the same time. You've got price moving up, but you also have theta taking it back down. So you got something fighting against price. So in the morning, when you have price action working, the price is all that's doing it, taking the premiums up. But in the afternoon, you've got price is taking the premiums up, right? So premiums are going up here. But theta is time decay is also running. So it's taking premiums back down. So you got two factors working against each other. That's why it was taking a little longer. So price is taking them up, but then theta decay is taking them back down. So you had to wait till it got enough of a push, this big push to override it in order to get you your money.
Okay, but remember, but I got in on that second candle, the
Here?
red of the day, the breakout, my
Oh,
breakout candle.
here?
See, I got in right
Huh?
there.
Okay.
So,
Here.
but I thought the
You
final
got
candle never even came above it though.
you got in here as this
But
one here.
yeah, when it
Oh,
broke the high of my opening range, I got in. I
yeah.
just said, I'm counting that wick.
Counting this, go with it. Okay, so
Mhm.
you did a call credit spread right here.
No, a put.
No,
I did a put.
you did a put credit spread here.
Uh-huh.
And then you did a call credit spread as your PDT?
Yes, ma'am. Hold on, let me make sure I ain't lying to you. Yes, ma'am. And I'm like, what was that about? Hold on, let me look in this thing one more time. Trade. Let me make sure I ain't lying to you. Option change. Where's my positions field?
Okay, so you did a put credit spread
Mhm.
here, and then a call credit spread here, which, yeah, it makes sense because now this is pushing into the zone. That makes sense.
Oh, okay. I
Yep,
was
that
like,
makes
what
sense.
the world?
You started pushing into the zone because it came up into there, and again, you got theta decay. Yeah, that makes sense.
Oh, okay.
Mhm.
Okay.
Yeah.
I'll take it. It was a win, but I was
I
like,
bet
I
you
didn't
will take it.
understand it.
Mm-hmm.
Okay.
Mm-hmm. All right. Okay, let's go through our list of stuff that I had in the Where's our little sheet? Oh, I thought I took all the stuff. Did somebody fill in the sheet? Did I take the stuff off it? Where is it? I thought I took the writing off the sheet so that way we could fill it in together. Or did I? Yes, I did. There it is. I think I copy pasted something different. Okay, where it says use this to get ready for next week. Why do I feel like I got something else here that I didn't want? Where'd that come from? Oh, I did want that there. All right, let's go and bring it to the main screen. This is the stuff I found today. Can we make it any bigger? Did y'all look at this? Price closed. See if I can make it bigger. You should be able to look in your Telegram, big picture, SPX weekend prep week of June the 10th. Price closed at 6,000.37 on Friday. Everybody there with me?
Yes, ma'am.
Okay, the daily trend is bullish, but it's extended above the 20 EMA. I think I want I'm gonna go get my, there we go. I wanna go get this and I'll make it a little bit smaller so we can have more than one thing on here at a time. No, I don't want the whole thing.
Coach,
Mm-hmm.
why are you using the EMA versus the SMA? Is it more sensitive or
Good
accurate,
question.
or
Yeah, I like the EMA because it's the exponential and it does respond a little bit quicker. Both of them are fine,
okay?
except for
Okay.
if you like the SMA, that's cool. But if you're gonna use SMA for everything. And if you're
Mm-hmm.
gonna use EMA for everything. But I like the EMA 'cause I think it responds quicker.
Okay. All right. So I'll
Yeah.
change mine because I use the SMA.
Mm-hmm. Yeah,
Okay. Thanks.
either one is fine. Just be consistent.
Okay.
Okay. So I've got VWAP open. I got it anchored on the week. I'm taking this to a little higher time frame. Okay. It closed on Friday. We closed at 6,037, right? Daily trend is bullish. We go look at the daily chart. We see that our daily trend, how do we know that our trend is bullish? Who can tell me what's the moving average we use to determine our trend?
Is that the 50?
20 period. I mean, the 20 period.
20 and the 50. Usually the 50 is a higher one. We use that to determine our trend. Right, and our 50 is this blue one. This is our VWAP too. Let me turn our VWAP off, and our 50 is the blue. Our 50 period moving average helps us see the trend. This is the blue one down here. We're pretty far from it at this point, but it is still trending upwards. Okay, that lets us know that we're trending upwards. Bullish, but extended above the 20 EMA. Now, why do we care that we're above the 20 EMA? Why does that matter?
Isn't that momentum?
It's momentum.
Mhm.
What does the 20 act like?
A magnet.
Yeah.
20 acts like a magnet. We're pretty good distance away from the 20. So the 20 can act like a magnet and try to pull it back. So we're still bullish, but the 20 can try to pull it. Notice here, 20 is this red one. When I talk about it being a magnet, notice how the 20 period, how it's been out here. The price has been out here and it came right back down to the 20 and then bounced off and came down close to 20, bounced off. It came in a little bit and now it's bounced off. So now the 20 is still down here. The thought is that it could at some point try to come back and bounce again. All right. So that's why I'm mentioning where it is in reference to the 20, because the 20 is like a magnet. Okay. That's why that's mentioned in there, because it likes to pull the 20, pulls it back inside, pulls it back towards it. Okay. We're nearing key resistance zones overhead. See our gamma and pivot areas. We mentioned our gamma, and pivot areas. CPI is going to be Wednesday. We talked about that earlier on the YouTube. CPI is Wednesday, PPI is Thursday. What didn't get mentioned here, and I don't think I can edit it, was the 10-year and the 30-year bond auctions are also Wednesday and Thursday. The 10-year and the 30-year are Wednesday and Thursday. So they caused a bunch of issues the last time, and I'm sure they will cause a few issues this time. So they're showing up as yellow folders on the Forex Factory, but they definitely need to be showing up as at least an orange folder, but they're Wednesday and Thursday at like 1:00. So we got to keep that in mind when we get to those days as well. Our gamma picture on Friday, our gamma, well, at 3:55, our gamma was like at 15,000. And then at 4:00, it went to a negative. Yep. Somebody got a question? This is gamma at 3:55. Actually, it was 18,000. I thought it was 15,000. It was 18,000 at 3:55. And then at 4:00, it dropped to, come on, negative 54.59. Okay. I want to go look at that other gamma chart though, because that gamma chart is going to give us hopefully our walls. I found our walls on a different gamma chart, but I want to see if I can find them on this gamma chart so that way we'll have a resource that we could use all the time. Maybe I'll go to 3:55. Yeah, I'm not fond of this one either. What I have, there's another group here, Bear Trap Discord, and I might have found this through Phil. I don't remember if it was through him or not, but this is a free Discord, and I was able to do the GEX SPX, which is gamma, and I can see the chart. And when I can see the chart, it showed the high for the positive wall of gamma, which is 60.20. It showed the spot gamma, which is the 6,000, which is basically where it closed. And then it showed the volume trigger of 59.65 and then the put wall of 59.50. So it gave some zones for where gamma is over the weekend. And this is good. This gives us good information. I believe I put that information in my little printout too. So that way we could talk about that. Here we go. The spot pinned is 6,000, still heavy positioning near 60.20. Gamma wall 6,000 is the main cluster. 60.20 is the major positive. 50.90 to 50.50 are the walls, the put walls. So now we got zones to look at for next week. Got zones for that. And then we got VWAP. I took the VWAP and anchored it on the week. I went down to the 65-minute period and anchored VWAP on the weekly. So we can see where is VWAP on the weekly chart. That means for you to be moving. Let me close off something else so y'all can see where VWAP is. VWAP is the blue line. Our volume weighted average, and it is down here around 59.62. VWAP is rising, is bullish, but still intact, but stretched short term. Support area 59.80 to 59.50. Overhead resistance near 60.20, 60.30. Its resistance is this line here. 60.20, 60.30 right in here. Okay, so now I gave you the picture of the walls. These are the things we're using to refer back to during the week. Our good old gamma area, our max pain is at 59.25. Our upper pivots. When I mentioned pivots to you all, I've talked about pivot points. Some of you added them to your chart, but the pivots traditional, those pivot points showing up on my chart. We got one at 59.98, 6,054. Did I have it on a daily? I think I was on the daily chart when I showed those. 6,000, 60, and 6209. When I get the 6,100, 6,100 was somewhere too. I was on some chart. So the things we've got. Now we do trade day to day. We're trading every single day, putting on our numbers, looking at our support, resistance, and gaps. And the next thing we're going to do is go look at our time frames. I hope y'all did that. We're going to go do it together. Did y'all look at this chart here where I showed you the time frames? Amateur hour from 9:30 to 10 o'clock.
Yes.
Pro setup window from 10 to 11:30. The pros are setting up. Midday chop from 11:30 to 1:30. The volume drops, the moves become random and noisy. Smart money comes back in between 1:30 and 3. And then power hour is liquidity surges, breakout, key reversals often happens. Great time for structure something. Great time for structure. What was the rest of that? I got to go find it so I can see the rest of it. I think I saw something the other day that said at those last 10 or 15 minutes, that's where like liquidity sweeps are happening and rebalancing, all kinds of stuff happen. That's why we see such wild moves in those last 15 minutes. Which I want us to be in the place where our stuff is locked down in those last 15 minutes. I don't like the fact that we're at the mercy of the market for those 15 minutes. I want us to have our trades locked by the end. So that way we're just chilling and ready to write in our profits.
Well, we know for sure the 345. I mean, that's why we've been, when you said the
Yes.
rebalance, and that's the MOC that we get. So,
Yes, we
and
already
then,
know.
surprisingly, Friday, like I said, Friday was interesting. We didn't have that pivot machine gun real action that we anticipated,
Yeah, that's true.
because we would have thought it would have happened.
That's true. We didn't want all that. It was a mess. A mess.
I have a question.
Yep.
about if you're a seller, like straight seller, not just
Yeah.
buy and sell,
Mhm.
wouldn't the earliest time frame be optimal for you,
Yeah.
like to
Yeah.
sell there? It seems like everybody's always pushing to not get in the market during that time, but I don't, it seemed like to me 9 o'clock would be
Yeah.
the perfect time to sell.
So I would say 10 o'clock because you would want like, or 9 o'clock if you're on Central Standard Time.
Mhm.
I would say you'd want to get in at 10. The reason I would say not 9:30 to 10 is because you've got so many orders that are all the overnight orders are coming in, and it's just a lot of volatility. So maybe that first 30 minutes, you don't enter any trades there because this is see what says wild volatility, great
Right.
for quick scalps, deadly for traders who lack discipline, because basically you just it's a lot happening. Now, this is the place for me, which for us, this is what we're doing. If you're getting into trades in this window, which is this is our window, this is kind of, we're doing a lot of stuff in this window now. But
Mhm.
we're getting in trades here and then we're locking our trades here. So now the drawback for a seller, if you're going to get in your trades and let them ride all day with no profit taking, then it's a lot, especially for SPX, because you see it goes up, it goes down, and then the last 45 minutes, your whole trade can go in the tank, and you're like, no, it was fine all day. But if you're trading between 10 and 10 and 11:30, you got a good setup, a good place, a good location, and you're going to lock it with maybe a PDT hack, or you're going to, take profits or something, then yes, that's a great time. Where
Mhm.
you hear people saying, me included, let's
Mhm.
wait till later. Maybe this is the second best window. Let's
Mhm.
wait till this window. This is because you're now exposing yourself to SPX for 2 hours. You got a lot of price action. You can see what did the day already do. And
Mhm.
then you're getting 2 hours of exposure, and you can see, okay, I already see where SPX is not going. I'm
Right.
willing to put my money out on the line for 2 hours, a short period of time, stay away from the heat zones, take my
Right.
money in for 2 more hours, yada yada. So either you go in in the morning, and you lock it down
Mhm.
with some kind of profit taking plan, whether that's PDT hack or just close it. And
Mhm.
then your second time is where you go in here and you say, okay, I'm going in later with a
Mhm.
plan of riding to expiration,
Mhm.
just knowing I've already got price action now, and I know where my safety zones are.
Well, what about I'm thinking like covered calls or, I'm thinking so 9 o'clock still wouldn't be the good hour since there's so much volatility.
Oh, now if you're doing covered calls, see that's gonna be a little different, because
That's
covered
yeah,
calls is you've got your shares,
right.
and you are, again, if your covered calls get breached and you're okay with releasing them, then that's no big deal. If
Mhm.
you're selling cash secure puts, you would
Right.
want that run because you want to put your money out and let the price go in a
Right.
direction. So covered calls, cash secure puts, this window probably would be a good window
Oh,
for
okay.
those. But
Okay.
if we
Okay.
talking credit spreads,
Right.
SPX, then you're doing the zero DTE, you want to
Right.
do one of these. Yes.
Okay. Gotcha.
Yes, yes,
All
yes.
right.
That was a good question. Yeah, but covered calls and cash secure puts, you can't hop in there and ride with that early morning volatility as a seller, go in one direction. Yeah, especially if you got a way to enter and exit and yada yada. This is true.
Okay.
Yeah.
Thank you. 'Cause my
Yep,
brain
yep,
is
yep.
smoking
Mm-hmm.
over here.
Mm-hmm. Yeah, no. These are good points. These are good points. Yep. But if you're doing credit spreads, then you want to get into these pro windows. You want to get into the pro windows. Okay. Let's go look at our chart. Where are we? Here we go. Daily chart. Daily chart. I started with the daily. We can start with the weekly even. Let's start there. Put us on some weeklies. Now, the charting does not have to take you a whole lot of time, okay? You can put on some weeklies and okay, I'm going to remove my drawings so we can work this together for some of us who are like, I don't like to chart. Let's do it. Okay, I'm on the weekly chart. We're looking for support. Let's find us at least 1 to 2. We can really find 1 to 2, if we want, support and resistance. I see a gap. Do y'all see a gap? Actually, I see one that continued. It was here and it's still over here. Close of one candle to the open of the next, or that, oh, it got filled by that price action there. So that's not a gap. This wick right here filled it. But we have a gap here,
Okay.
close of this candle to the open of that one. And we have the wick there. So there's a gap from 56.59-ish going up to 57.65. That is a gap on the weekly chart. All right, I'm on the weekly. So let's look at support and resistance on the weekly chart. I see 5803 as weekly support. Where can I write me a note? Let me write a note. There we go. Weekly support. 5801-ish in that zone. Remember, I put a line, but that's always a zone. Then we start where we are and we go up to the next place where it turns around. I'm at 6120 on the weekly chart. Template, I'm going to say weekly resistance. 6120. That's pretty far away from where we currently are. There's probably another one somewhere. I see one at 6090. That's a little bit closer. The more you chart, the faster it goes. Okay, so I got a support and a resistance. Actually, I see another support here. I'm going to go ahead and put it on just because we're on the weekly. I see it over here from December the 30th. That's around 5920. Weekly support. Okay, got those. Now let's go to daily chart. This is what's called a top-down analysis. Y'all ever heard of that? Yusuf said, I've seen traders with a 50 spread. I'm not sure about that. Draw my lines before via my desktop, but could not see the lines on the mobile app. You should be able to see your mobile app. If you do it on one place, Mr. Mac, you should be able to see it on the other. Friday was a perfect IC day. Yes, it was. Yes, it was. Okay, I'm on the daily chart now. Starting at current price, looking for support. I see one from May the 19th. Right up here where price turned and reversed. Reverse. Okay, template. Daily support. 59.63, I see. I think there's another one here at 59.81.
Isn't that resistant, coach, not support?
Well, when it's below the current price, it is support. It did go up, so it went up and reversed here, but if it's below the current price, it is support. But that support and resistance are interchangeable.
Okay.
Okay, but that's a good question. When it's below current price, it's support. And if it's above current price, it's resistance. But if price goes through it, it switches to the next name.
Okay.
All right, what do we have up here for some resistance. Let's go back now. We got to go back into February, which looks like February the 12th offers some resistance. Wherever price goes and turns around, looks like 6,024 template resistance. In that zone. Remember, any place you put a line is like a zone. It's not a hard line. These lines are like areas. I see another one in 6,038. Now, something else we can do, which is what we've been doing too, is in the mornings when we see that Adam gives us numbers, you put those on your chart. And the zones don't really go away. So once you have it as a zone, you can leave those on your chart. You see how I erase them regularly? You don't have to do that. They can stay right here because zones don't stop being zones. Or resistance and support, they don't stop being that. All right. Do I see any gaps on the daily chart? Let me see. Y'all see any gaps on the daily chart that I'm missing? I think this one here from the 5th to the 6th is one I don't have. The one we just were talking about earlier has not been marked on my chart. From 59.39 up to 59.77. That's a daily gap. There's one more
That
here.
one, yeah, the one below.
Mhm.
Oh,
This
wow,
one.
there's one below that. Okay.
Yeah, that was the weekly one I just marked.
Can we look at the monthly? I'm curious.
Okay. There it is.
Mm.
I have a support that's, oh, yeah, monthly support. There we go. Got one. Notice this pivot point right there. It pivoted 55.50. Turn right around. Pivot points is like some built-in support and resistance for you. So some of it's gonna save you some trouble. I think there is, and y'all may know it. There may be an indicator that provides support and resistance. Who knows about that indicator? Yep, support and resistance levels with breaks. Lux Algo, which I like all of. Lux Algo puts out good stuff. Support and resistance levels with breaks. I don't use this one, but I've heard of this. I've heard that there was indicators for support and resistance. Let me see if I pick it. Will it give me another one? Yeah, it gave me another one. I know I had one I turned off. Let me see what it looks like. 15 style, above bar. Have to see what it gives me when price is live. What does it look like? Turn off all the other ones, then maybe I can see it. Maybe it only runs live. Oh, there's some. These red lines. Looks like red is resistance and blue is support. Above bar, below the bar, break, this default inputs, left bar, right bar, volume threshold. Okay. We'll leave it on here and see how it performs when the market is wide open. Wonder why I didn't put one there. We'll watch and see. See if Lux Algo stuff work. Okay, do we need to see some more lines? We need some more lines on our 15 minutes. What y'all think? See, it's a lot of I went down to the daily chart, but now we got the price action and there's no more lines in here. We need some more fine lines. So I'm on 15-minute chart now. I'm gonna put some more lines on here. He does the support and resistance at the end of the wick. I like doing it at the end of the body, but that's an individual choice. All right, I do support and resistance at the body. So to me, there's a resistance here. Template, 15-minute. I need to create one. Save as 15-minute resistance. Okay, why don't you, there we go. No, write it. Write it. Okay, I picked it. Why aren't you writing it? Template, 15-minute. Where is it writing it? Okay, come on, thing. Fifteen-minute resistance right at the top. Right. Okay. All right. Here we go. And I want a line. Okay. I know y'all are charting. I just have the good idea that y'all are charting. I just know that you are. Okay, and some supports. Picking the wrong thing. Mhm. Watch it not write it. Ay, ay, ay. Okay. All righty. Okay, so we looked at our VWAP. We've looked at our gamma levels. Notice that was on the session. I looked at VWAP for the week. And before we get off, I want to talk about, I mentioned a little bit in the chat about our our 1 DTE strategy for using VWAP, because I want to revisit that. Go in one direction. Before we were doing it, and we were doing it as an iron condor. But I think we can run it again as a trial. We can use it as a trial in our sims in our sim and paper accounts to see about some 1 DTE with just one direction. Because I really like that for us. And I didn't want to have to leave it because I know it's a sound practice by using VWAP. But this is VWAP anchored on the week. We're above VWAP, and even when it pulled below it, it went back up there. And if we were doing, in this case, put credit spreads from 1 DTE, we would have been, you know, potentially able to make that work for us. So we're gonna revisit it again this week. But looking at the week, we're definitely above VWAP. We've looked at VWAP, we've looked at gamma, we've looked at support and resistance, we've looked at our high and lows, getting ourselves ready for the week. Who's got questions? Let's see, where did I put that? Bring this back to the front. Talked
Are
about
you using that other gamma chart you just showed a little bit?
the one with I looked at it
White background, yeah.
Yeah.
That one. Where is that?
Yep. This came from, let me get the link. This is a free Discord.
Oh, it's a Discord.
Same place that it's the same, you know, Discord is where Magic 8 Ball is.
You mean Magic 8 Ball? Okay.
But this is not Magic 8 Ball. This is another Discord, but it's another, Magic 8 Ball is a Discord, and this is a Discord.
Okay.
Different one. Let me see if I can get the link.
You feel like this is tighter?
This one gives you more, it gives you the ability to pick which one, what you want to see. In Magic 8 Ball, all we can see is the gamma for SPX. This one lets you pick what you want to see. It lets you pick which stock you want to see. So
like a Tesla or XSP?
Yep. So when
just about to ask that.
Yeah, so I did XS the other day when I put XSP in here, it kicked out. So I did I'm on the one. See, if you look along the left, there's other things here. I go to just the Gex bot. There's other things that are here. I don't know what all this other stuff is. I just go to the one that says Gex bot.
And you type in
and I
what you
type
want?
in exclamation point Gex dash, and you can put in XSP. That's what I did. I did SPX today. Gex XSP, and then it kicks out the information. The other day I put in Gex 0 XSP, and then it'll give you the 0 DTE one. So this is XSP net gamma or net, gamma for XSP for today. So it tells us where's max pain, where's the spot, which is Friday's expiration, what's the wall, and the price. So if you can scroll through here, I put the link in the chat. And people have put in other ones. And then in the morning, people put, you see the VIX is here, MU, TTD, people putting other things. They're getting the gamma for other things through here. And this is a free Discord. So I gave you the link for that.
Look at ES.
Okay. I will do that.
I don't know if there's been any news other
I
than
was gonna say something else. Now I'm thinking of what was it? Okay. I will look at ES before we go. Like there was something else I wanted to say before I left here. Oh, I was going to talk about having put those other stocks inside of our trades alerts channel. I'm not sure if anybody took any of those, but I put them in after PeakBot entered those trades. I put those in there. I don't know if I will continue to do that because I already have talked about not really doing the other trades and calling those signals. But when PeakBot does it, I just put them in there on Friday. I was riding. So you all got the blessing. God's got a blessing with your name on it. Let's go look at, are we still in, has June switched over, do you know? The nomenclature, has it changed? $59.98. It shows.
I see a date on in parentheses that says June 25th. I don't know if that's
Oh yeah, that's true. When I just type in ES though, it only gives me one choice. It doesn't give me the ability to pick something, some other one. So I always pick the same one. ES minis, index futures.
Usually, Adam will call it out too.
Yeah,
To say
I'm using this one. Currently, it's at 59.97. Looks like 59.97.75. A little bit lower than where we closed on. Well, I'm not sure where it closed on Friday. SPX closed at 6,000. Let me see what's SPX 500 right now. Oh, it's 9 o'clock. Time just keeps on slipping. It's 59.91 on SPX 500.
so there was a dip. I don't know why. I don't know if you want to go to CNBC.
59.97. We're about 6 points.
Yeah,
6 points is the gap. 7 points.
interesting what the dip is. I have to look at CNBC and check it out to see if something happened.
I think I had CNBC. Did I still have it open? Nope. CNBC. Besides the National Guard stuff.
Right. Oh, weren't we supposed to be meeting with China?
Well,
Was that supposed to be this week?
I think it's
And
tomorrow.
it's okay, so it's coming. All
Yeah.
right. Him and his big talk, you know that, hey, we gonna taco it up. Hello.
yeah, but the him and Musk, that whole
Well, we
bromance has
still
gotten
waiting.
really
That's why I
ugly.
was curious if something wait, speak hopes. They hoping that they could
Yeah, because
reconcile.
it's got worse and worse. Them
Well, they not talking right now. So
such a public fight.
maybe I don't know if he sold the car yet. We'll see. But I think that grid you had said pain point was 59.25, and that's definitely below the gap.
Oh yeah, that's true.
Oh
That's
shoot,
true.
where this red came from?
I was just about to say, it's California.
Is that what's doing it? The ice? Okay.
Yeah.
He declared martial law in California, and I'm like, that's going to affect the market tomorrow.
Oh yeah.
He hasn't done it yet. I'm sitting here watching it. He hasn't done it yet. They all downtown acting fools, but he hasn't done it yet.
Wow.
This is crazy.
Wow. Yep, there we are.
Oh, and then remember, Saturday is the parade, so you know, send your prayers up for us in DC because it yucks. It's just oh Lord.
Because this is Pride Month, isn't it?
Yeah, Pride was this weekend,
Okay.
and
And
yeah,
Juneteenth is coming up in a couple weekends, right?
the following week. But his birthday and the parade is Saturday.
Oh,
So if he and Lon don't make up, I kid you not, he gonna have some drones covering the whole thing. I know he is. He gonna be spying.
well, Jesus. We got arguments going on all the fronts. All the fronts, because the folks in the Christian community is all arguing back and forth too right now. It's a lot happening.
Oh, really? For what?
Yeah, because folks saying one thing and then they saying they didn't say it. It's a lot happening. It's like there's too much happening.
Oh, Lord. All right.
In other news,
Right, Coco Golf won, so
this
we
is good.
celebrating.
Yep,
So
this is
we'll
this is
take the
good
win.
news. We'll
We'll
take that
celebrate.
win.
Whoop, whoop.
Yep. Did you all see the movie? Anybody watch the movie Straw?
Mm.
Yes.